Right now, somebody with incredibly deep pockets is buying December calls on gold on such a scale that the volume is an absolute outlier. It smells like somebody knows something and is prepared to take quite a wild card bet. People are sleeping on a fact that the debasement is currently ongoing and running, and the only valid unit of account in an absolute leper colony of varying fiats that are all deeply ill with the same disease is in fact the gold ounce.
And don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. Hello and welcome to Wealthion. I'm Maggie Lake, and joining me today to discuss debt, money, and what to do next is Francis Hunt, the founder of The Market Sniper. Hi, Francis. It's wonderful to have you back on.
Thank you for asking me back. Delighted to be with you, Maggie.
So you have been warning about debt levels in a stressed fiat system for some time now. We have discussed it. You've been here on Wealthion talking about it. How are you feeling about this moment? Where does it feel like we are in the cycle?
Yes, well, we're in a chronic debasement at the moment, but it's going unseen. So there is what I call the Jedi mind trick, or the nominal normie effect, which actually sees something still going up, but people not recognizing by our accepted unit of account. So I have to make the case that we don't have a valid unit of account in any fiat representing any nation in the world right now. And in actual fact, we've had since 1913 this huge financialization of everything. We've had the everything bubble. And right now, unbeknownst to many people, that is already deflating down. The only reason it's not being observed is people are watching dollars, dollar-based NASDAQ amounts, European, euro-based FTSE 100, or I should say maybe the pound if I'm saying the FTSE, or the DAX on the euro, etc., etc. So what we're actually being is we're being played for fools. On monkeys on essentially a greased pole, and that the unit of account is carrying the debasement, and that is part of debt. So I like reducing things really down to a simple context. Debt is just fiat with a timeline, a deferment, and a rental agreement attached, which is the interest rate. And we are seeing both devalue chronically, but we initially had, and this is why on our first appearance with you, we said the 2020 call was the biggest call we'd ever made in terms of significance for everyone. It was the turn of the bond market at the late 2020s. Subsequently, Tudor Jones and Druckenmiller declared their positions late in 2024, some 4 years after us, and what you'd had is a huge debt value debasement. We did the same. We ran the interest rates on Bank of Japan. At that time, all of them, including the 40 years, were well below 1. And we said these go through 4, 5, and 6, which was a ridiculous statement because you'd had a decade and a half. And what you've actually seen is all of that is happening. That is the debt debasement part, and it goes hand in hand with fiat. But they kind of do a two-step, like a jogger running, left foot, right foot. So you see it on one side, and then you see some more of it on the other side. And that's kind of where we are.
Yeah, so I think you bring up a really, really important point because, you know, we have been talking about this, but there will be people listening, and fair enough, as you point out, who say, well, if we're on the brink of crisis, why are global equities rallying? Why is a 10-year treasury near 4%? I'm looking at my retirement portfolio and I'm up, double digits in some of these names. So actually things feel okay. Where do you see the signs that the existing system is breaking down? What should we be looking at?
It's very beautifully phrased question that you just put, and I really want to deal with it because we actually just covered some of this in our recent Substack. I'm going to cover the Nikkei and I'm going to cover the NASDAQ, two that take you from the extremity of the East to the key West market, and the NASDAQ specifically, you know, the banner of hyper performance for equities. And I'm going to do one key thing in both instances. I'm going to show you them nominally, and then I'm going to show you them in what I consider to be our new and only stable basis of account, a gold ounce. So if you're seeing this right now, Maggie, I'm showing you the Nikkei. This looks like an absolute gift of an equity market to be participating in recently. Since 2009, if I put a measuring ladder on the lows there and I lock it on, you can see that this is up tremendously. We actually had called a massive inverted head and shoulder and said you're going to go through the legacy high of 89. We all remember the bubble era, and that you've actually got a target of 74,000 on this. And everybody will, why aren't we all heavily long the Nikkei index? Well, you can be, but you will be underperforming. You'll actually be in a rebasement. And the interesting thing about the Nikkei is that it went down and sideways for the better part of 2 or 3 decades as well as part of this. So in spite of its nominal performance recently, and in fact the Korean Kospi is even further extreme on a shorter time frame. But the minute I divide this by a gold ounce, you start to see a totally different chart. And you can see that generally this is, graduating to the lower end of the chart. And it's the exact same with the NASDAQ. I'm going to bring it home. Your audience is going to have obviously a strong domestic market, and this is going to be even more harder hitting for those, the culture of equity. We're going to have the day when this element of equity, you look at the NASDAQ, this is just a beautiful index on all accounts. If I do the exact same thing and I say to you, Fiat is the masquerading, is the monkey on the grease pole that's slipping into the tar pit, you should actually be comparing it in gold ounces, which reflects the proliferation of Fiat, and we divide. We've crossed a key level. We've crossed a very, very key level. I'm going to just switch the eye on and you'll see the annotations I put in. There was a period from 1980 where you would have wanted not to be in gold, and this is part of the financialization of everything into tech era. So this was a hugely beneficial era. You don't need me to tell you that. Into 99, 2000, there was then a very violent correction. And then we started to have the subprime lows, quantitative easing came into play. A lot of that initial money first went into the tech and the growth. So you had a second but lesser bull market during the period of 2012 to 2021. Now, where are we now, and what does it mean going forward? Because it's all very good reading the tea leaves in retrospect. What can I say? And the message is very stark, Maggie. If I show you this, this is a head and shoulder that we've been anticipating for quite some time. Left shoulder, complex head over there, and there's your right shoulder. We are in the month, right here in February, and I'm sharing this key moment with you, where we've tested the neckline. There was an initial rejection on that head and shoulder and a rally back up, and that has been rejected back down to where it opened and through, and you are now in what I describe typically as a triggering event of a major reversal in relative valuation for technology stocks compared to a gold ounce. And just to give you an idea how large this will be, there are values along here. It won't mean too much to everyone, but when you're at the 2021 high, you're at about 9. You're in 20s in the .com 1999. You're at about 4.65 on the triggering of the neckline. You're now below that at 4.41, and our targets take you to 140, 1.4, and lower still to the downside. So in terms of asset allocation and our macro technical analysis, this is not the time to be overweight stocks. It's even tech stocks, AI, NASDAQ stocks, whatever you choose to include in all of that. The composite index is there for everyone to check. Gold is your overweight. It is your primary basis of account. And this is a capital preservational error. And that is why we refer you back to our earliness on the 2020 and the reversal in the debt markets. It is a fiat and debt debasement. You are already having debasement in other assets, even though in some senses they may be making nominal inclines. In the key new benchmark of capital preservation, everything is deflating already. So many people ask, when reset, Francis? As if it's going to be a single moment in a single minute, like it's a 5:01 on the 23rd of April.
They ring the bell, Francis. They ring the bell.
A neon sign. If you're looking for a sign to have a drink, this is it. There you go. I'll give it to you. And in the same way, this is a process, and the process has already begun, and people are sleeping on this, Maggie. That's a huge point, and I want to just leave there and hand back to you on that. People are sleeping on a fact that the debasement is currently ongoing and running, and the only valid unit of account in an absolute leper colony of varying fiats that are all deeply ill with the same disease is, in fact, the gold ounce. And very few things deliver alpha to the gold ounce. Silver and miners, for selective periods, not all the time, will potentially be one or two of those that might.
And if you're looking for a simple, secure way to invest and own physical gold and silver, visit our sister company, Hard Assets Alliance, at hardassetsalliance.com. That's hardassetsalliance.com. And we'll dig into that a little bit. So I think this is a great place to start. And I always think about things I might ask you, Francis, but I'm going to throw them all out the window, and we're just going to do this in real time because you're bringing up some excellent points. So I love that you say people are sleeping on it, but they're not. It's not because they're not paying attention, right? It's because the whole system around them has been engineered to have us look at a certain thing. So, I have a lot of sympathy because people, they it's not that they're not trying to understand, right? And that's why we have these conversations here, because there is a feeling we are in a new period and we have to kind of retrain ourselves to look at the right things and pay attention to different markets. We are a very heavy equity culture here in the US, and that's going to be hard to break, but I think it's important that we all try to do so. So you mentioned that gold is the only reliable unit. What about Bitcoin? Because that was sold as, postured as a possible solution / alternative in the face of some of the pressures that you talk about. Is that no longer a viable thesis? How are you thinking about Bitcoin? It's down 27% in just the last month. What is that telling us?
I'm going to give you my response on Bitcoin in 1 second. I just want to, I love the analogy in your setup for that question. People are sleeping on it, but they're just focusing on the wrong things. It's kind of like a whiteout when you're a skier and you're standing on skis and your gyroscope in your body says you're moving, but you're looking around and you're not. And you could be skiing backwards down one of the steepest hills. But because everything's a whiteout, it's designed to be like that. It's designed to confuse. Everything's fine. Just carry on standing there. Everything, all's good. But the gyroscope in you says something's not right. And you're actually skiing at 30 kilometers backwards down a very steep hill. So clearly, that's how it feels, because it's a very well orchestrated, synchronized event across most Western nations. In spite of that, the dollar was the worst performer last year against the other lepers, as I would call them. Now let's deal with your question. What about Bitcoin? So here's the key analysis that we do, and we're quite consistent with everything, or we like to think we are, and we always aspire to be, and we'll be pulled up if we aren't. But if I put Bitcoin under the same criteria, you will see that the Bitcoin is actually be divested from in quite a radical and accelerating manner. You've got to bear in mind that much of this, what I'd call surgimentals and pumpermentals era, was off a very, very minor market cap in the early doors back in 2012. It wasn't $1.5 trillion market cap back then. It took a lot less money to drive it up. If I just bring this out of the log scale, which is the correct way to view long-term charts, and just remind you of the regular scale and reframe that a little bit, that is how Bitcoin is performing. I'll take all the lines off because they're now out of place. That is how Bitcoin's performance relative to the unit of account is. This is absolute rejection. This is absolute rejection, and it's technical failure on multiple levels. And in fact, we'd pre-seen this because this was a marginal high. This is just around 40 gold ounces. 40.27, I think it was the absolute high here, was a marginal high on the 69,000 previous cycle high. That was the high of 2021, 2022. So we've been battling to make higher cycles. These are your history, massive, okay, only just, and now not so. So the technical charts on this are saying there's not enough new money to keep scaling this, that it's going ever higher on an exponential valuation relative to gold. Further to that, you look at who the buyers are. All the Grand South and the slightly more sound money nations that have made many errors. China has a property boom that's bust and a lot of other things. But what are they buying? Well, the United States has accessed the record deficits with two key economic trade zones, Euroland and China. And what are they both buying? They are no longer aggressive buyers. In fact, of the long end, so from 10, 20, 30 into the big durations, 37% has been purchased and held by the Cayman Islands using basis trade funding. I mean, just give you an idea of that. And an interesting thing with Operation Twist, which takes you back to subprime, that was Bernanke buying the long end and making available shorter duration. And who was the recipient of the shorter duration? China. And they've let a lot of that run off. So what you are actually having is the de-risking of America exposure in terms of the debt and the fiat by the major deficit, the surplus nations to America, the deficit trade nations to the US. And the situation is incredibly precarious. So I mention all of this. Bitcoin is underperforming to the gold ounce. Those countries are actually restacking gold. You look at Poland in the European side, Hungary, particularly the Eastern Europeans, and you look at obviously what China is doing, you see that in fact gold is being stacked. You look at Russia, what they are doing. All those that are deemed antagonist nations, there is a colony of lepers. Japan, for example, is part of the Western Axis, even though obviously being in the Far East, so is Korea. And obviously Europe and the United Kingdom haven't covered themselves in glory in following sound money principles. But overall, gold is winning, and Bitcoin should be becoming this should be its crowning moment, and in actual fact, it's falling apart. That is to use a not so technical term, a puke through a key level there. And you're looking at, in gold ounces, 1, 2, 3, 4, 5, 6, 7 months in a row that Bitcoin is giving up value. And in terms of it against the dollar, we even have it going down against the devaluing dollar, the fiat currency, which is the monkey on the greased pole. So it's not a good time for Bitcoin. And if I can leave a couple of fundamental points, a huge amount of the original gangsters, as they were called, the OGs of 2009-10, who I have my own thoughts about who they may be, but I'll let other people have their own guesses on that one, are unloading into these hyper-leveraged new wave treasury companies, and many of those treasury companies are hitting distress, but the new ones particularly, Strategy was the original, they've been brought into question immensely recently, but some of the smaller ones that started at just the wrong moments are now spread eagling into AI and data centers and selling all their Bitcoin. So you're actually having a crisis of confidence here, and I think the emperor is going to be found to wear no clothes. If you really want sovereignty, you don't want digital money of any side. The ultimate sovereignty is cash. I could give you a gift. Your son might be turning 21, your daughter might be turning 18, and that could be between you and me and Maggie as a friend and all of that. The minute we start registering who's paid who on what day and how much in any form, even if we promise all forms of secrecy, we are creating record. And that makes me concerned for the digital surveillance world that we're being dragged into. So it's not a sovereign place, and Bitcoin is failing in being sovereign. It's failing in being low cost compared to other cryptos, and it's failing in being digital gold. Too many fails for me there. And then you look at the tarnished reputation that's come with the Epstein revelations. I'm going to be getting reaction on your YouTube. Your crypto guys are going to hate on me, but I'm going to say it as I see it. That's pretty much where I'm taking you.
Yeah, and the reason that it's important to talk about in this conversation is because, we just went through a period where institutions got involved, people were told to diversify, and so people who sort of, your ordinary class of investors and high net worth across the board, but I mean sort of non-crypto investors, may have been increasing exposure to this. And so it's important, to bring that up if you are, if it's your opinion that it's not an alternative.
Can I comment on that amazing point you've made? And by inserting myself in again, sure. I'm reminded of a key event. We called for single digit oil for the first time in 35 years in 2019. That was a predecessor to the CV19 events. And one of the key tells that became a confirmatory tell for us was Aramco, the Saudi mega trillion. It was one of the few trillion market caps. We've got a few more nowadays. Oil companies suddenly decided it was time to share the national wealth of Saudi Arabia and do share offerings for all citizens to participate in. And by the time the trade becomes openly available for the people, it's often exit liquidity. And as you found out, they would have handed it over, their citizens would have bought, they would have carried the loss to literally negative in the futures, essentially zero in the cash market oil. Many of the people would have sold in disgust and been bought back by the original families that decided to share the wealth. That's my inherent suspicion, and I'm looking at Bitcoin, and I think while nothing is exactly the same, there sure is a similar rhyme to this story.
So if we are in a situation where, say, everybody takes your advice and starts looking at everything versus gold and realizes, oh, these charts are not what I thought at all. How does this play out? What does this look like in practical terms? If everybody wakes up from the slumber, do we have a slow shifting move? Are things going to break because everyone's kind of rushing for the exit or looking for safety quickly? How do you see this now? Because it sounds like you think we're on the precipice. I mean, we're talking about this, so it's not going to be a secret anymore. How do you see this playing out?
Well, the interesting thing is, as I've mentioned, I used the phrase people are sleeping on this. I don't think they see it as the final unit of account once all fiats fail. People aren't seeing fiats and debts failing. There aren't. Most people in the street, if I stop an average Joe in the street, not a financial viewer of your channel per se, would not even be of the impression that there's a fiat and debt-based contagion and correction. Probably because they're not that engaged in the financial markets. Your viewers, I would imagine, a higher standard of awareness. But the truth is, it takes quite a conspiracy to do what is happening. You're talking about an entire fiat Western world at minimum, and to some degree, the fiats of the other world, the rest of the world outside of the West will also be correcting. They're not immune from this. They've also made bad decisions and proliferated. But you've had that. Then you've got to look at the aspect that gold is still not really being held on any meaningful level at the moment. So the fact that people are waking up to this is, it's one thing to, okay, that's an interesting idea, I'll think about it, but people aren't doing anything. The holding in hedge funds averages between 0.5, 1% and 2% on average in general hedge funds. And that's a bit like, I consider it's a bit like insuring your car to the value of 2%. I don't know what you drive. Maybe I should mention your house, but I'm sure it's a nice house. I'm pretty sure a household cover is not 2% of its valuation. And that doesn't mean you should have 100% in gold, but I am overweight and I have other proxies that actually allow me to be hundreds of percent overinsured without meaning I don't own a property and other things. So in terms of cash markets, I'm probably closer to the 50% exposure to precious metals. And that is high and getting higher, by the way, as it moves in my favor, and B, I continue to throw fuel on that fire. But I also have proxy positioning, which involves our trading that we're doing, utilizing leverage, and we are aggressively biased largely to the long side, trading multi-time frames to quite low time frames to quite big time frames. Our community, we haven't minted more millionaires for a small business. I don't think there's anyone doing a better job of it right now. Look, it's not about us. It's about the perfect coming together of the ideal wins, the right catamaran, and the right sales. And we can't get it wrong. And just basically good, decent salesmanship skills. So the rest of the world is sleeping on this, and some of us that have seen it this way, I continue to get endorsement for my view by the degree of free cash flow and profits that are just hemorrhaging our way. And I'm even buying other assets apart from gold, because it's almost like, how much can you store? How big do you want to be?
This brings up many questions that I have on my mind, and you're right, and we have a real asset community, because there are people who watch Wealthion who are interested in this, who do want to try to figure out what they need to do to prepare for the future. So we're excited about that as well. So you just mentioned you have cash. So there is let's talk about like the nuances around this, because I think that when people hear gold is the only unit of value, we are headed for a debasement, fiat, currency reset, it's sort of like the world is ending, you have to own all gold. That's not very practical, right? So you're spreading it across what? Gold and cash. Now, cash sounds like I'm holding cash. If fiat is imploding, does that make any sense? So how do you explain that to folks?
Well, I'm not trying to hold cash. I'm just generating too much cash. And so I'm having to bury it in other things. and I reach the point where there's only so many 7-digit orders you can place with each of the different bullion brokers. They're having greater problems to fulfill it. So what we're doing is I'm buying development land, for example. You were actually on the other side. I've given you the bad view this time because of our setup reasons.
I saw the good view before. Yeah.
But the good view is actually in line of sight of that at the foot of Table Mountains, just above the build line. I'm securing 80,000 agricultural. I can put 3 quite sizable homes on there. I'm doing other projects just to have variety. I own all my own homes in a number of jurisdictions. I'm fortunate that way, mainly because I want to have multi-jurisdictional existence and multi-jurisdictional gold holding, gold vaulting all outside of the West. Because I'm anticipating failure. I think when things get nasty, people haven't seen how aggressive Western governments are going to get towards their citizens and their needs to meet their commitments. They're going to cut commitments. They're going to make, Holland just announced, by the way, unrealized capital gains for coming in 2027. Unrealized capital gains, as far as I'm concerned, is property confiscation. That's property rights being undermined. You become a forced seller. If they deem, they could come to your house, Maggie, and say, a nice $2 million house, we think it's a $10 million house, we think you've made $8 million, and our tax at 36% on that is going to be in and around 3.2 million. Can you please pay us now? And what do? Will you be forced to sell the house? Will you get a loan, and will you become indebted and encumbered? I mean, that is essentially a slow burn asset removal. And I hate to take people into the weeds. I don't have your permission to go all conspiratorial on you, but the World Economic Forum strapline of "you will own nothing and be happy" has me thinking I'm sitting in the corner of a dark room with a lot of pharmaceuticals pumped into me, and I no longer own much. And I'm not a mad fan for that image.
Yeah. I don't think any of us are. So that's a good sort of, overview as we talk about this, so that we can sort of, get an idea. So let's go a little bit more specific again. So if this is the situation we're looking at, is that news already priced into precious metals? We've seen a big move over the last and a quick one. Do you think that, and I think that's the worry, if I'm not in it already, I've missed it, and I should wait for a pullback. Maybe that sort of crisis reset is priced in already. How are you thinking about the price action we've seen?
So let's deal, I have 2 thoughts. So let's deal first more directly with your question to respect it. Is it fully priced in? Well, has the banking system gone bankrupt? Have you seen the wholesale news to that effect? Have debt instruments gone to near zero, if not fully zero? Are we already now in a new system? Have we had a sort of Bretton Woods call all the rules of the rule makers of all the major financial nations together in a room? Have all those events transpired? This is not a sort of a trend meme. This is not a trade meme of 18 months, a year. This is an entire end of a macro cycle that comes from the beginning of the Federal Reserve establishment. You have the first rip-off where they took confiscated gold and then they upward priced it. You then had Nixon drop more munitions in Vietnam than the entire of World War II, which saw the French decide that there's too much fiat being proliferated and not enough gold. Can we have the gold, please? That led to the close of the window. So not only have they lied, they were caught lying, and they were called on lying. And it's quite clear they're liars. So when people are talking about Fort Knox, is it there or is it not? I'm not high on the trust spectrum. And I would say we're seeing an asset strip of the West, and it's migrating east. And to many people, they don't realize they're living on a facade of a building. It looks like the Royal Hotel, and behind it, it's completely knocked down. There's 2 rusty metal poles holding up an entrance that look grand, and actually behind it, there's a shed and a toilet and a lot of flies. We've got to watch out. We're being hollowed out in front of our eyes, and they've done a very good job of anesthetizing everybody to this chronic debasement. And gold is definitely, for me, there is no other option of what is, and there's very few things that'll outperform it, apart from silver and miners, as I've mentioned, and there's risks associated with the miners, such as nationalization. So I would certainly have the physical metal as probably a primary holding, and then I treat my miners and my call options on miners as my lottery tickets and the more speculative aspects of my holdings.
Mm. In this environment, would you expect now that things are in motion and Asia is pulling gold its way for the dollar to consistently devalue here? What is your outlook for the US dollar?
Well, in terms of Asia sucking the gold, it's quite clearly the case. The Asian sessions, in fact, we're making use of that on the lower timeframes in our trading community immensely. We love buying late on a US session on Friday and holding over the weekend, doing the exact opposite of the jobbers, and it never stops to help us make more money. The Asian sessions are generally stronger. In fact, I saw, I think, a 30-year chart that showed if you were just holding gold long over the different sessions across the globe. And the late London into the American session is actually a gold losing chart, believe it or not. I saw it up until I think it was around 2020, 2021. So I don't think that would still be clearly a losing chart necessarily on the Western sessions today. So I'm describing something that's now a little bit outdated. And the actual gold chart was the one in the mean, and the Asian chart was just an unbelievable, it would embarrass Bitcoin. And actually the gold price is the hybridization of the two. So what you actually have is a discount window that is being crowbarred open over the Western session that has been 100% exploited on the Eastern session and then being opened back down. So the real money, which is gold for me, a la the JP Morgan quote, is already been heading, and I think this is possibly compensation in lieu of treasury holdings that invariably are going to be near worthless or impossible to sell on any grand scale.
So does the direction of does the dollar have to devalue for this for your thesis to stay intact? I mean, is that just a fait accompli now, and what does that look like?
You just have to go back to the design of the entire system and a clear understanding of Triffin's dilemma. Going back to the fact that you have these trade deficits, and this has existed before since Marco Polo, when the West was first trading with China. And they were a beautiful, sophisticated, this is pre-communism, that had Ming vases, incredible, and India had silks, spices, and China had the silks. The West was buying more of their stuff, and the East was buying far less of their stuff. And what did we do? Well, the banking cartel behind Britain had British soldiers go die to force the right to sell a highly addictive heroin and opium, and it's known as the Opium Wars and is the history of Hong Kong. Well, we have a similar situation today. And in terms of the direction of the dollar, which is your question, is it fait accompli that the dollar will be the fallen angel of a first world currency greatly diminished? And to me, the short answer is yes. Why? Triffin's dilemma is when you are a hegemon, it is by design that it is that way. So you are over-consuming other people's products, you have an overinflated currency, and you provide that currency in the form of debt instruments, dollar-denominated treasuries, as an excess in lieu of your surplus consumption in the opposite direction. So they throw you extra goods than you're buying of theirs. And you balance the book by saying, have some paper and IOUs in the dollar. So when the system unravels, which it is doing, the paper and IOUs are no longer respected. And this is, again, the 2020 call, late 2020. The minute the bond market turned in nominal terms, that was a major, major crisis. It had already turned in gold ounce terms, I want to point out. But now everyone could see the bond market was a busted flush. Everyone understands nominal, even if they don't trade the gold ounces as we do, as unit of account. And since that's happened, what's actually happening is China's not actually taking the treasury bills in lieu of. They will pass it off to somebody else who will, or they'll say, we'll just take gold. And this is how I think they're being compensated. So it could well be the discount window on the Western session is in lieu of that. And this invariably by design means the dollar is the most punished economy, a currency, my apologies. And I want to point out, you are on the tallest ladder when you're the hegemon. You fall from the highest because you have proliferated. Many will say as part of the cope. But what about Japan? It's got more, debt. Japan's at 253% debt to GDP. When you add in unfunded liabilities, they go up to 350%. America's at about 135-ish, although I haven't updated it for the last few months, and it's getting worse, quite a rapid rate. But if you add in the unfunded liabilities and commitments that have been made, you're closer to between 550 and 600%. And that's not me, that's Chicago professors in your own country that have given that number. And that was done a while ago, and you've expanded and expanded even further. So rather, one of the famous tropes that I most loathe as an inaccuracy is that you're the cleanest dirty shirt in the laundry. No, you're the largest, dirtiest, and you're coming out, you're getting the hardest wash. You're getting the bleach and the big machine, and it's going to be brutal. Unfortunately, and I don't do that as doomering on the US folks. Love the Americans, love visiting your beautiful country. It's a tragedy, and it's a fact of hegemony.
So I think that as people see this and agree with you, perhaps, other strategists and economists, and there's always thought about where does innovation plug in here somehow. And so Brent Johnson, for one, I just spent some time with him, and he's thinking about and suggesting that maybe stable coins not only stem the dollar's decline, but actually further cement it, US-backed stable coins, as a global reserve currency. Do you see that as a possibility? And does that at all change your outlook? Is that okay, maybe that might happen?
So if you're asking the question, I think you are, is that could stable coin proliferation lead, because of the fact that they're buying some treasuries as part of their collateral, lead to a very strong bid that could sustain the bond market for Americans? Is that correct?
Yeah, and also just sort of, sort of further cements the dollar as a global reserve currency.
I don't see it. No, I think that's and the amazing thing about this is they need to keep anesthetizing you, and this is one of my favorite tropes that I've been slaughtering. Like I mentioned, the cleanest dirty shirt. It's the dirtiest and largest. I'm also going to say this is, and I'll throw the numbers at you because I've had to deal with this because it's been put to me many, many times. And I do think this is constructed narrative to protect and keep everyone, don't worry, we've got a special plan. It looks like we're in a hopeless situation, but then we're going to pull the Jedi mind trick and poof, we're going to disappear. Right. So I'm going to explain why I say that it's absolutely, in my opinion, I'll put 99% on it, that I don't expect it to do anything meaningful for you apart from advancing the digitization of all transactions. Here's why. In the 14 years, it's now 15 years, we're 2026, that the largest stablecoin Tether has been around, you've had 163 billion in treasuries purchased as part of the collateral. Actually, the performance of that, and then they pivoted more aggressively and made a lot of statements. Bitfinex was getting bullied, founded by Brock Pierce, who's also behind Tether, and Lutnick, who's got involved as well recently. It's worth mentioning in terms of dropping names. But recently had the SEC back off them once they made a big fuss about how they'll be buying treasuries. Well, since then, they've actually lost an immense amount of value. Their collateral has lost. They were talking about raising capital. But in the meantime, they took all the yield that came from the treasury. It's a fabulous business because they pay no interest to people who own tethers, and they've been scooping the yield and declaring it as profits. But the actual asset value has been chronically devaluing. And I'm just going to show you that, by the way, because long debt, this is TLT. The asset has been chronically devaluing. And when you're supposed to be providing surety for a stable coin, you're supposed to be providing collateral. And they keep buying the worst assets that give them a little bit of income, but in lieu of that income, lose an immense amount of capital value. This is the head and shoulder that broke. We were up top here in 2020 when we called the first inverted. We expected a bounce here, and then you performed to this target. Now, since then, it looks like you've got a base. But in actual fact, again, divide by gold. This is a terrible chart, divided by gold. And you are, because of the dollar debasement, so you had the debt debasement, now you've had a year or two of the dollar debasement. When we add it, it is losing immensely. So TLT, I didn't explain this correctly, I'm talking so fast. It's a long dated, it's a portfolio ETF of long dated debt. It's what you have when you hold a whole bunch of 10, 15, 20, 30-year debt in an ETF. That's how it's performing in gold ounce terms. This is your debasement right here. And you can see it was debasing in gold ounce terms for quite a while, since 2000 in actual fact. But you had a nominal bounce here where 2011 to 2016, and people in dollar terms still thought they were going up. They were getting a little bit of a yield. Rates have been artificially far too low. The other thing we've said is higher for longer. Lows are going to be, pullbacks are going to be shorter and shallower, higher new highs, higher highs, and higher lows. And that illustrates that this is a terrible part of collateral. And since then, they have started to speak of buying gold and buying silver miners. So what they've actually realized is that they may have been able to skim some income and pay out in dividends huge profits, but the actual collateral has halved. You're talking about a halving of the collateral. And you have Bank of America that in around that time bought 500 billion. Well, that's worth 250 billion. Imagine marking to marking all that. It's amazing how that doesn't seem to be being done. So the collateral to back it is going down. The more they buy of that asset, the more they're going to buy of a devaluing asset. Mm-hmm. So how badly, when you don't want to be called and you want to retain the stable coin, if they were to continue on debt purchasings, and bear in mind they've only bought 160 billion. Last year, when you had government closure and you reopened, you put out 600 billion in 2 weeks and are averaging half a trillion a month. And that is climbing above $500 billion a month in terms of deficit accumulating. These guys are creating paper on a scale. It gets difficult because people, billions and trillions, they all just merge and it's just, big number something. You need to think that a billion is just $1 and the other stuff is $1,000, 3 more zeros. You bought 160 billion, that's not 0.16 trillion in 14 years. And you've got the better part heading for 40 trillion total and an issuance of 2 or 3, 2.5 probably a year. So what's this guy buying 0.16 really doing? I'm tempted to draw you a little sailor on the edge of the boat peeing in the ocean and saying it's not really much.
Into the wind. Yes, I think we understand that visual. And this is tough math. This is really tough math when you sit down and look at it. So given that, what is your forecast for gold? What do you think your upside target is?
I'll tell you something that's interesting, not my forecast, but something that's being acted on. And I'll give you another example where it turned out that was also acted on, also in the precious metals market. Right now, somebody with incredibly deep pockets is buying December calls on gold on such a scale that the volume is an absolute outlier. I unfortunately don't have the tweet with the diagram. Maybe if you have a diligent team, they can find it and they search for it and put it in the edit. But they are buying December, that's the end of this year, basically, call strikes at 15,000 and 20,000. That means they only start to make money above those numbers. And those would be considered probably relatively cheap, but they're being bought on such an industrious scale that it smells like somebody knows something and is prepared to take quite a wild card bet. Now that sounds like a 4x from 5,000 plus in a single year. We could be talking about a year of crisis and it's coming. Where did that happen before that makes us even noteworthy? Maybe it's a clown with a lot of money who likes gambling. Okay, well, the same thing happened in the silver markets when we were in the late 30s, early 40s, and then dribbling into the early 50s. There was, I think it was February or March, incredible call buying at the $80 and $85 mark, outlier volume. All of those ended up deep in the money on the spike. So somebody's informed and somebody plays. And I've never believed in there's no insider trading and there's no levels of people who actually get real benefit. So it's not a destruction of a fairy tale I've ever clung on to. So, but I do watch what the big money does, and volume in technical analysis is an amplifier. I often say when we're teaching in our program, the guitar makes the music, but if you want to be heard, the amp is the volume. Meaningful things happen in big volume because that is very well informed big money. And they often know more than you or I. So I'll leave that with you as somebody else's forecast. And I'd like having the lottery ticket on that side, and I'm quite happy to trade even if it doesn't do that. I'm quite confident it's going to do exceedingly well. So even if it misses that, I'm expecting at least as good a year as last year, if not more. And the problem with contagion, Maggie, is it gets disorderly. Because what happens is me and you are talking, and we're both kind of interested, and we watch this regularly. We are the early adopter part of the curve. The normal part of the curve where everyone starts to realize what's happened is when the panic happens. And that's when unobtainium happens for all metals. Platinum, silver, gold even can indeed occur. And a whole bunch of awkward truths might come out of the closet. And you'll feel the American emperor, those who've represented you, have worn no clothes and told many lies. And I fear that's the next chapter that's going to be playing out.
Wow. So this is such great food for thought, Francis. Just amazing. Let's get a little bit more specific for folks that are in our real asset community who are tracking this closely. So we've got this potential enormous bull run in front of us for metals. We saw the big reversal in January when silver collapsed sort of 30% in what felt like just a few minutes. Of course it wasn't, but did that cause any rethink? And how are you thinking about the behavior of trading here? Is it going to be, when we listen to the fundamentals, you think it's one straight run up, but are we going to see this sort of volatility in what is a channel of gains for metals? And what do we need to be careful of if people are actively involved already in the market?
Yes, and I'm going to, I don't want to pat myself on the own back, it's very arrogant, but we were very fortunate to have got square and out of all longs just before that
what
crash.
Made you do that? Because you're so bullish.
Yes, and we shared that even on X, and I'd done an internal the night before update, an emergency update to my community. And this is the value of being technically based. So here's what's done, and I'll talk people through this, and I can even share for you to include in the edit the tweet that went out. I was riding, funny enough, in the desert the next day for 4 days, and I did it. I thought, well, I'll tell everyone else and who's Freeview as well, but I'll just put a tweet out. And you could have still got out at 111, and you ended up trading, I think, as low as 64 on silver when that happened. So I'll include that on you. But before that, the night before leaving for my 4-day excursion in the desert, we did a all long close on the leverage side. In terms of investment, I'm absolutely disinterested in any medium-term volatility. I warn everybody you should expect that. Every now and then you're going to have contagion runs where everybody gets, oh, this is good, we're going on a charge, this is how it looks, and that you're going to have a charge. You're referring to this period over here, by the way. And also, we came back on the 4th of February, having left in the early morning of the 30th. I'm also going to point out that we're currently very much in the reflation camp, and this is a once-off strike back that had occurred. But let's just we were very aggressive in the silver because that was now the silver gold ratio was dominating, and it is also the more volatile one. So it's kind of, in a sense, almost the more impressive call because you would have taken a pretty beastly hit. What started to happen, our last setup here, you were squeezing higher. You got this first warning strike over there, and then you went into a rising wedge, and then you got a second warning strike. And that was these candles. I do weighted candles, so by volume, so people can see that those were backed by some volume in terms of that. And then it gave you a final return move to the rising wedge with the volatility. And we'd just been getting a lot of margin hikes and everything. So it was becoming a bit too hot an area, an immense amount of margin hikes. I remember it was quite ironic. I was with one of my community members who was visiting me here in Cape Town, and we were driving over a mountain pass, and my broker called on, when you're on the earphone, Francis, you've got these amount of positions in your door. We need to phone and tell you that, your margin's going to go up about 5 times on this. You're still fine because I have a lot of open margin. I had a lot of capital in there. But I just need to warn you, and there could be more. And not only did they do that one move, they did the more move as well, where it did become an issue. But anyway, that all happened in the build-up to all of this. So things in silver were getting super, super hot. So we closed out here, and that was on the 30th of January, and we were very grateful to do that. And the technicals pointed to it. And also the buys. It was getting a little bit too hot. to do that. And it's going to do this all the way up. So anybody who's choosing to do leverage trading on precious metals could lose everything if you don't understand stop losses and you don't have technical analysis and method. It is high risk. For most people, that if you don't have the time and you don't have the inclination, if you're not in a well-informed community and you're educated on this, you're probably best just being what I call blue pot, which is investment. But if you do it right, we've been burying an inordinate sum into our blue pot from trading profits. So we always do the triangle, the red pot, the orange pot, light leverage, and blue is investment. And we always tax down. So the goal is everything ends up in investment, and it almost ends you're playing for extra in the leveraged areas. And you must have method, and you must understand stop losses, because if you got in late and you were chasing in on mad hype and you got into a point over here and you didn't have a stop loss, small fortunes could have been lost on the downside just in a single event. And that's an absolute tragedy, especially on something going up. So
I love that. I love that framework that everyone has a different one, but I love the idea of the pyramid with the levels that you're willing to do leverage on. People think of it differently. I've heard it referred to differently, but I like that concept. So where do you see the best opportunity within metals now? Because it sounds like this is just sort of bullish, that hard asset class. Do you at this juncture have a preference for where you see the most opportunity?
We had a short spell of dollar strength. That was a good non-farm number. I don't believe a word of it, as you can imagine from my framework. And also a fairly benign CPI number. And that was after the dollar. And I do need to make this point. The Dixie has fallen out of, before we go into the weeds with gold again and the gold euro. Let me just make this point technically so you see a visual of this. The dollar has fallen out of an 18-year bull trend. And I need to show you that just as a reminder, because it sounds like I'm just dissing the dollar and, like some big hater of that particular fiat. Not at all. It's, as I say, it's by design. There's quite a bit of technicals, but you might see this dashed red line over here. This has been your 18 years since 2008 trend line. And you were in this trend channel. I do need to go back to log scale because it's gone a little bit cockeyed there. Let's do it. There you go. That's your trend, and that is the 100 level that I put in blue. Now, you have a couple of setups with downside targets in the Dixie. So that means even in the leprosy world of contaminated fiats, the dollar is one of the scabbiest lepers, I'm afraid to say, if you'll forgive the phrase. So there's more downside in this, and I will show you that. You have been, in the fiat world, benefiting from your Chiffin's dilemma where you were getting inflated. You can see since the crisis of 08 and the proliferation, actually the dollar has had moments of dominance, but it reverted, it stayed in here. We have now broken to the downside. I'm going to drop the time frame on that and just bring you into shorter term, because some of you would like to also know the trajectory of the dollar with a strong US audience. And as I say, we are bearish here. And many people say too much. They feel, well, we sold off too long. They think there's a certain time frame. In the big cycles, you've never lived or seen a big cycle unwind. Everything is a typical frame of reference. Oh, you have one good year, you have a bad year. No. There are cycles where it just comes bad, because you don't know how good you've had it for so long. You've been a consumer nation at the cost of everybody else. You're the fat guy on holiday who keeps ordering burgers and chips, and the Japanese guy, the Chinese guy are bringing you food, drinks, and resources. The European Frenchman is bringing you wine. The British person's bringing you a Land Rover or whatever he does, and you've been putting it on your tab, putting it on your paper. And now they're saying your paper ain't good for it. We need a hard payment. So this is on that 18-year trend line, which has broken the dash line. What I'm drawn here is a bear flag. And you can see you had a rally off it. You only made half mark on the flag, and you're now down. And you've had this return move moment. And I think you're in that right now. And that's another reason why the way Bitcoin is failing so badly, because the dollar's actually been quite weak. It's supposed to be strong and dominate in there. So we've got a flag set up with quite a low level at 87, and we're expecting further downside. Of course, it can rally all the way back here, but you've now fallen on the wrong side of that line. You tend to return move and then roll over on new events. So the dollar is vulnerable. Your question was, what's the big trade? Is it gold, silver, and all of that? And I took you into the weeds of the gold. But to take you back on that, we've had that rally moment, return movie type moment of the dollar. And in actual fact, you had setups on the gold, euro. We do all our analysis on 360 degrees. We don't just look at gold. We were famous for at $87 oil, saying you want to go short oil, long gold. That's a 2-year trade now, and it's given you on both legs. Think about that TLT chart I showed you divided by gold. Imagine you've gone short TLT, long gold. How are you winning on both sides of that trade? And now we pivot, we look at it across the euro. And when I take you back here, and then one other point I'll make as an aside regarding your question about the shooting star, the big slap that you got in the metals. That's called a shooting star, and it is bearish. It's a very bearish, it's localized high. And the only way you can negate a shooting star and go back to being bullish is if you have a similarly volatile opposing and opposite candle to the downside. And what is that? It's called a similarly volatile hammer. That means you continue trading down, down, down with great momentum, and you overshoot the mark and you get slapped all the way back up and you make a hammer. And that's exactly what you got. So typical candlestick analysis neutered the bearishness of that shooting star, and you're back up on reflation. So our YouTubes, people can go see this. I mean, there were just these 2 candles. And in fact, we called it before this week was even up, because this is a weekly candle. We called it when it was still a doji. That means that body was flat and it was slightly red. It was flicking red, and that we said that is sufficient of a rejection that you will go back to green candles after this. And that's exactly what you've got. You've had 1, 2, 3 weeks. So since that event, I will highlight that this is accurate. Let's take you into the gold euro. So we're in a current technical trade right now. And these are shorter term stuff where we are just maximizing and gaining additionally.
Yeah, and I will say, since we're talking short term, that we are taping this Wednesday, February 25th.
Yeah, very useful. Thank you for that. So let me just show you. I'll just attach that as well. I mean, just in that time, that's a 4.5 million trade just from getting in on this one platform, and I run multiple platforms, just getting into this upside HVF move here that we've made. So let me draw that setup for you, because that's worth just in what the market's done for us, and that I'll be turning into further stack and 1 or 2 other assets and maybe some fun and games. But we're doing this for our community members as well, and we've got so many people so happy.
So you're thinking about not just I'm bullish gold, you're looking at the cross that you like that to trade that on.
Yes, and they will all go up because gold will win against the dollar too. But this particular setup is better than it was on the dollar. So I wasn't beating up on the dollar against gold here. I took the euro, and we also took the Australian dollar. And I'll illustrate that. The reason why it was slightly less perfect on the dollar is you went higher here. We must have the highest point here. So this is essentially a 3 impulse. We call it the HVF. It's after yours truly, Hunt. And then the other keywords are volatility and funneling, HVF. And we got a recovery, and we were calling bull bias. And you can see how beautifully it worked. I mean, you went up. You see this little red candle? It made our first interim target. That's that little dotted one. It came back into range, and then it went up, and it's made our second interim. You get a bigger, it's a more serious target. You get your significant pullback, and then we are anticipating it to run through the 4,573 euros. Remember, that's not a dollar, so different denomination. Very similar structure setup, neater and tidier this one was against the other fiats, and it was totally justified because you then ended up getting the rally in the dollar, and the good non-farm payrolls number. I don't know what payrolls are going to give out on any given day. I'm not sure any of us do. I'm going to just leave the broker and get the Aussie again and show you how that was, how it worked for both the euro and the Aussie. The dollar was actually a slightly bit firmer during that particular tactical trade.
So you're really having to. So I think this is very important. We always say understand your time frame, right? And so if you're shorter, you have a shorter horizon, and you're willing to have more of a trader mindset, really have to think about this, based on what's happening short term in currency markets, because you can get waves. that will maybe not work as well, even though you're in a large move.
Bull
When you're
market.
you're looking at the gold silver ratio, I understand that you've got a view that's a little bit different than other
Yes.
people. What are you watching? Why are you watching it, and what are you seeing there?
And can I take you to a chart before we handle gold,
Yes.
silver? Because it's part of the same story and it's better shown before. So if we, for example, take the silver chart, we've got a lot of, in fact, let me not do this one where I'm trading on. Let's do one where we just do a generic chart. So I want to show you a much larger time frame, Maggie. So this is the biggest setup, and I believe I probably showed it to you the first time, but it's worth reminding. It's worth a revisit one. So some of the going back to the slap in the face the metals market took in the 30th of January as well. We were on alert notice because we expected it once a certain level was run. We had a second interim on a far bigger pattern. So let's show you that pattern and make that make sense for you and your viewers. 49.81428. I just have to do a short adjustment on data. So what I'm doing is I'm making one little point. I'm taking it out of the equation. This is our draw tool, by the way, which our community members get. So this is an HVF setup. Again, the simplest structure is 3 impulses. Simple, quick explanation is a squeeze in volatility where you're funneling. And this is multi-generational. That starts from 64, Gulf of Tonkin. It actually starts from the Federal Reserve formation, you could even say. But here's your 3 impulses reduced to a simple diagram. And inside of that, and I call it you mentioned Brent, he's a good guy, by the way, and I like him. But I called it the Brent Johnson headless silver guys, because he said, the silver guys are going to go all headless. We've crossed $25. And I said, Brent, mate, you're wrong on that one. This is the beginning of something far bigger. And we had the squeeze within a squeeze. So we call that a primer. And that was his call. As we were saying, you're about to go really, really big on silver. Of course, he's quite right. Many people have called silver major moves. You've had to have the patience of a monk because this is an entire generation cycle. And it's taken a lot to break the great American economy with fiat proliferation, but eventually they've done it. And it actually started quite slowly. But once we ran this 90.58, which is our second interim, we were on short notice for, okay, we're backing off on the leverage size we use, and we're ready to cut and run out of leverage and just be investments. At some point, something's coming. And like the Bugatti Veyron it was, once it crossed the line, it still took a few meters to stop, and it ran to 120 there, and then it came back. Now, this came back right to a shooting star, and we said before this 3-month quarter is up, remember that's 30th of March, 31st of March that it'll happen, around about my birth date, this green candle will already have gone back up. So it looks much less like a shooting star, and that's already happening. It was at one point, the green was just that little bit there. And so this is an active candle. It's not complete. So we are going to refill it, but you had a massive rejection. Everyone will agree. But that rejection, Maggie, is going to be lost on a 3-month time frame. Eventually, that green goes all the way back. It's just going to be a minor detail on the way up. And just in case the target, you're not seeing the target, that's through 333 in our opinion. If people don't think that's ballsy as a call, let me just take the logarithmic off and put that on reg scale so that you can see exactly what's implied. Not only did we say you're going to run the 90s, quite quick succession once you triggered out of that primer, at our Brent Johnson call there, you're also going to have a rest, and there's that wick fizzling back, and then you're going to go in, and this is the open areas once you've respected the second interim. And you saw that a bit when I was showing you on the shorter time frame, the H4 gold against the euro. Our interim targets were met and respected, and you got a pullback. The second interim, we met, respected, and pullback. And you are busy you had that pullback, and now we've already begun the reversal part for what will be an impulsive move through there. So that's part 1 of how bullish we are. We do think you'll have another rest, and there will be some sideways and downside slap in the faces like you were referring to in the one that passed January 30. But we are even more bullish than that, in that we expect 4 digits. That takes us to the gold-silver ratio, which was originally your question. But I thought the context of taking you first through the weeds of the actual silver chart was probably worth a while, because many people will be asking in the comments, what does Francis say about silver and the actual silver chart in terms of price? Now, in terms of price, the 333 is our highest price, but we get our closure for silver longs, and when we would rotate potentially to gold or even other assets, will only come for us once we hit single-digit gold-silver ratio. And many people will go, but 30s was the norm for a long, long time. And some will say, what about 15? And others will say a lot of things. We are in an entire cycle where the relative valuation of silver has been perverted by the financialization of everything. And the smaller market was the easier one to bully. And the central banks stacked real gold because it had bigger value items. So the silver is the most bullied child. And you actually went up to 128 up top here, 0.692, 128.7. As far as you are perverted to the high side in relative valuation, remember the mining has gone from 8 to 7.4 to 6.9 at the end of the last known year that we have data for. That was Silver Guru, our friend Dave Morgan, that was doing the total production of silver ounces divided by gold ounces. So it sounds like I'm being a wild, crazy man saying you must be 9.99 or lower, but you could actually get to 3 ounces of silver for one. Because for a passing, fleeting moment, I'm not suggesting that that represents value. I'm just saying what overshoots to the high side. This was exactly what happened with oil. We said single digits, but I did think that there was a chance we could go 0, but I just didn't know how the futures markets would handle that.
Well, I mean, this is all. We'll have to have that conversation in a whole nother show, because there is a question about how the sort of structures respond to such a big change. So if we were to do that, what does that translate into in terms of price of silver?
Well, let's just say you're at 25,000 gold. Let's say these call guys are right and it all happens this year. And let's say it all blows up and happens really fast. That means it wouldn't. I personally don't think it will, and I'm not for a minute putting it. But let's say everything that has to happen with banks blowing up and gold going to a very high price and the silver going into single digits all happens this year. Not a forecast. I'm absolutely not saying that. But if it were to have happened and you're at $25,000 gold and you're below 10, let's say for 10 for mathematics, but you're 9 or something, you would be looking at $2,500 silver. And let me once again say, this has got very little to do with silver and gold and everything to do with the fiat that you are choosing to measure it in, because it'll also be a high number in euros. It'll also be a high number in rands, where I'm sitting today, and British pounds for our British followers and fans and Aussies and Canadians, etc., etc. It's a fiat and debt debasement. They are actually staying the same. They don't give birth to any babies. They don't charge any interest, and they don't pay any interest. They're the same boy they've always been. And they're still sitting there, and they'll still be in the hole in the ground where you left them unless someone stole it. And they'll be the same construct, the same molecules. This is actually the contagion of collapse. The gold price, as I sometimes share, is actually your fiat-based debasement that is taking place. You just need to see it inverted to understand what the fiats are really doing. That is your chart for the universal proxy of fiat, right there. And we are in the bankruptcy part of the curve, the Ernest Hemingway, slowly at first and then suddenly very fast. If that isn't a convexity curve that absolutely captures slowly at first and then suddenly very fast, I don't know one. And it's your inverted gold chart. Again, I refer to you. This is your basis of account. This is telling you the emperor has no clothes. They have pushed it. You will find out things you will be shocked to learn in terms of what's gone on behind the scenes, in terms of fraud, debasement, all forms of things. I'm not waiting to find out the narratives. I'm acting on the charts because the big money is already moving those markets, and they already know the stories that we'll still be finding out. I don't trade narratives. I trade technical because I get in much, much earlier, and I see what the big money is doing by doing so. So I leave that with you.
And we'll leave on the last on this last thought. What is the biggest risk to your view? Where would you be wrong? What would cause you to say, "Wait a minute, something new is happening here"? It's
It's an
always the question we ask, but it has to be an exercise we do, right?
Yes, and it's an excellent question, and it's one we talk about specifically. How do I be wrong in this?
Yeah.
Is one of the best questions. We do it in technically on our
Right.
technical assessments in the community and everything else. So here's how being wrong works. On the very big macro, where we've had a lot of time to study our history, we haven't regularly been inaccurate on majorly things. Could there be out of the blue divine intervention? You know, the who was the one guy who never died? The chariot came and collected him. I can't remember biblically. I should know the name. Someone should put it in the comments below. Educate
Yes.
Francis. Who
Help
was the
us
guy?
help us out.
Put it in the comments.
We've
Who was
lost
the
our
guy?
way.
Quote the biblical quote, please, and give a like to the channel while you do it. But anyway, if there was some act of divine intervention, you would have. I think it's going to be. It would be in the currency digital crypto realm, and we don't like digital money. We think it's here to take our freedoms. It's here to remove our privacy. It's here to be surveillance and every element. But if there is something that's going to be an out of the blue outperformer, it will be the status crypto tokens that they'll be mainstreaming as our new system. And it won't be Bitcoin, I don't believe. It'll be things possibly like XRP. Some of those that value privacy. It could be Monero. It could be XLM, which is also part of that. These that have worked actively with the banks to introduce and have always said all along nothing about liberty. They're bringing the digital money world. So they've been more candid. I almost hate Bitcoin for telling a lie. I see it as it was captured from the outset, but it pretended to be our friend. The fake friend is more dangerous than the declared enemy, to me personally, and then the phony narrative. But that would be one area. I don't see all the balls that have got rolling. There comes a point, Maggie, where you can never say you can never be wrong. But by the time I've built up a snowball and I've rolled it down the mountain hill, and it's gained certain scale, and the amount of positive endorsement in terms of real riches, wealth, trading gains, investment gains, and a whole swathe of other things across all our trading accounts, and the endorsement and the surge into our business, guys registering, everything is winning. It's very hard to see the halfway down the mountain rolling snowball not hitting the village at the bottom of the mountain. You know, Superman could come out with his kryptonite and blast it into a million smithereens, but that we're getting into the fantasy realm here. So I'm fearing that, this plays out. And my biggest concerns is being right about a very negative thing, the social impact of this. These are far more important. How many people are going to want to try steal from us, try hunt us down, try rob? If the large
major
amount
social unrest, right?
Indeed, the martial law that goes with this, the poor, the people that will be working poor, that were decent people that never saw it coming. I see every person I convert and turn into someone who buys an ounce of silver or gold as one less civil rioter throwing a stone at my fancy car on a freeway, and we've got to win. We've got a duty not only to save self, but I'm quite messianic about it, to save as many retail, decent people into saving into the right vehicles, so that it's not just the status and a handful of us, because they will weaponize guilt, they will weaponize privilege, they'll weaponize all forms of things and say we should be taking all these assets. Don't you hungry peasants agree? And we get reduced to the crabs in a bucket situation. We need more winners. I don't want to win alone. That's not a prize I want. I want to win with many good people who've understood the principles, the reasons, the real messianic sense of mission that I have about this message, which is why I show up on unpaid appearances, always will make time for serious people that will purvey a method. We need to win. We need people to climb onto our boat because that's one less rioter, that's one more person, that'll be a community member, a neighbor watching my back when I'm not there, etc., etc. It extends beyond wealth and money. I probably have more than I need to spend that I could spend on anything. Even if I got I would never get a cocaine habit and a taste for Ferraris, but I don't know how I'd burn through it all. But I'm fortunate that way. But the point of the matter is we need more winners. We need more winners with us of everyday people. And we need a community of winners. And we need to try push back against what goes with this, because they will be seizing, and I say they, you can fill in whoever you want for they, this opportunity that comes out of this collapse reset to tighten and ratchet up controls and living standards. We're fighting for our freedom by building wealth. We're fighting for our freedom to buy back some privileges that they now assume that were rights and have become privileges. And you need to protect it, and you need a multi-jurisdictional existence for that. And all our community members, we are working actively with them by extending their footprint and making them wealthier and protecting what they've already made. And that is the three key things, and that's my key contribution at the Market Sniper to society at large. And we use HVF method, and we use positioning in the sweet spot of one of the most determined bull markets that is going to outperform and shock even myself, never mind the average gold bull. And I'm probably got the biggest horns for this bull market, Maggie, and silver as well, and in terms of expectations of performance. So yeah,
Well,
that's
amen,
where
amen to that, Francis. And I think a lot of us worry about the same things, and it's certainly what we're also trying to do here at Wealthion. So we so appreciate you joining us and sharing your views today. Thank you so much.
absolute pleasure. I look forward to the next time. Have a great time, guys.
And don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free.